All right, gang, welcome to another episode of Charts and Coffee. Happy Tuesday, everyone. Happy Tuesday. Rocking a little, what do we got here today? I've got some Peaberry, some Jamaican coffee this morning. Hope everyone's doing well. All right, welcome to another episode of Charts and Coffee. Ready to rock this Tuesday. I think we're good on audio and video. And all right, we are good. Okay, so yeah, we are trying a different platform today to just kind of combat the issues we were having just the other day. There's nothing I can do to combat the issues of some hair issues. I'm busy looking at the markets. All right, gang. Great to see everyone today. All right, no yeah, I'm not doing the Ethiopian. I'm doing some Blue Mountain. Yep. I love the Ethiopian, that medium roast. Yeah, I do love that. And actually, the Death Wish coffee folks have a medium roast now too. So yeah, a little Blue Mountain coffee. So good morning, everyone. Good to see you all. All right, let's get to it. So by the way, the layout's a little bit different on this particular platform. So until I get used to it, I'm just going to go ahead and zoom me out of the picture. We can take a look at the charts. I am using the TradeStation charts today. All right, so let's get to it. Got a question here about, all right, let's see here. I'll start at the top. Can I talk about any potential further upside in ZS? And it looks like I got a voicemail. All right. Can I talk about any potential upside in ZS? Yeah, I'm happy to. So let's jump right into that. So Zscaler. Now, we have earnings. So one of the things you'll notice that I have on the chart is this handy dandy little tool on TradeStation where I can actually just put the date on there, which I like a lot. So after the bell, the 18th, we're getting close to that. We're getting close to that earnings date. So within 14 days, I like to start to just be very aware of implied volatility. I don't want to trade through earnings, but yes, I mean, I'm looking for that long position in ZS, and I'm just looking for this market to maybe head up to a recent swing high. That's all. I'm not looking for new highs before the 18th. And if we get there, terrific, right? Terrific. But I think it's really important to think about scaling out at near-term, let's see here, at near-term swing highs or minor highs, and not get too carried away with what the market could do, and rather just deal with what it's done in the past and pet yourself while you can and not when you have to. So thanks for the question there on ZS. Really appreciate that. Okay, next up is, hey there, Em. My pleasure. Thanks for showing up for Charts and Coffee. I appreciate the time. All right, FCX, Freeport-McMoran. So to talk about Freeport-McMoran, you know what I'm going to do. And any of you that have been here at Charts and Coffee for any length of time, you guys know that what I like to do is look at copper and then look at Freeport-McMoran as a proxy to copper. All right. And so if copper is heading lower, that may not fare so well for Freeport-McMoran in the near term. But remember that this move to the downside that we saw was a reaction to earnings. So we definitely had an earnings reaction and we've recovered since, but that heaviness in copper may not be super helpful today. All right. Home Depot, sure. All right, and remember, one of the things that we're doing as we go through every one of these symbols is focusing on the underlying market structure, and that's where I'm afraid, my friend, Home Depot just falls short. Now, just to put a little bit more perspective here, almost about a 10-month look back, Home Depot's in distribution. Home Depot is a yellow market, and it's in distribution. And yellow means for me sort of, well, like a traffic light, right? So yellow is not speed up. Yellow is tap the brakes. And what we have here is Home Depot tapping the brakes, a little bit more neutral, a little bit more range bound. And this would be a pretty classic example of a Charles Dow distribution market trend. And so when we have a distribution market trend, what you want to think about is overbought, oversold, and less about continuation, more about buying the floors, exiting at the ceilings, and basically treating it as a channel, right? As a channel. All right. So just keep in mind, and I do want to mention that we all have a market environment that we like better than others. And I think for most traders, if you think about the market environment that works for most traders, it's definitely going to be a trending market environment. All right. Okay. So next up, and thank you for the question. Next up, Alex asks, do I ever turn my long calls into diagonals rather than straight? So go with a call vertical or a debit spread. Sure. So again, what is a diagonal? It's just a strategy that's going to have me buying a call. Well, let's talk about what a call vertical is first before I go into a diagonal. And the quick answer is, Alex, I typically do not. All right. So usually what I'm going to do is I'm going to only choose, this kind of goes back to Shelley's question, right? I'm going to stick with a market that's trending. So let's go to a market that I do have my eye on, and that's TSM. All right. So we've been playing this uptrend. Last year, this was the gift that kept right on giving, and I don't suspect that SMH is going to let us down anytime soon. We like these trends in semiconductors, and TSM is the number one weighted name in semiconductors. All right. So if I'm looking at a diagonal call spread, I'm basically looking at a multi-leg strategy. A call vertical is as well. And it's basically, what is it, a cross between a long call calendar, right? And a short call, right? It's a lot moving. There's a lot of moving parts. So Alex, just for that reason alone, I don't typically like multi-leg strategies. If I don't have a pure directional play on something, I really don't want to trade it, period. So yeah, I will stick with the call vertical because it allows me to offset the cost and the potential risk in a very simple way. And it starts off as simply a long call. So that's kind of the why and the what of it. But no, typically not. I can't tell you the last time that I did. Not that there's anything wrong with it. To me, it becomes a pretty busy strategy. It becomes a very busy strategy. All right, FSLR. So First Solar, thanks for the question, Jazz. Yeah, so let's talk about the structure of First Solar. Let's zoom in just a little bit here. Okay. If I take a look at the way in which this market has pulled back previously, look at all the blue grab candles when we do pull back to the 34 EMA wave. And for those of you that are not familiar with the wave, what it is a strategy that allows us to take advantage of dynamic support within the context of a trend. Generally speaking, I think the path of least resistance for this market is up. But when you see how much this market's sort of gone neutral, right, yellow traffic light, it makes sense to not look for an entry until minimally we get to the 34 EMA on the close. If you do get in at the 34 EMA on the high, which is the green moving average, do so with very small size and just calibrate to the fact that you're very likely to see the market move a whole lot lower within the wave and heck, even pierce it as it is now. Does that undo the long? I don't believe it does. Thanks for the question. I am bullish. I do like it and I will stick with it. All right. Eric asked about Constellation Brands. Sure. STZ, and again, earnings not till April, so no issue with earnings. However, well, I have this issue. So this breaks the trend. It does break the trend, and I would treat this a little bit more like an overbought, oversold, but definitely with a bullish bias. And I think if we can choose to be directional, one-way traders, we're going to find that is going to be, I believe, a whole lot better for most of us. I think when we're open to trading long and short, And PG is this, PG would be short only if I'm going to do anything, right? I would say in an environment where, let's face it, gang, this is the movement on the S&P. This is the movement on the Dow. The path of least resistance continues higher. So if I've got a name that is not able to keep up, and think about where Procter and Gamble lands in terms of the passive investing universe. Where does it land? It lands in a sector that in a reflation environment, which macroeconomically, we're in a reflation environment. And in a reflation environment, I don't typically want to focus on utilities. I don't want to focus on staples. So a whole lot more broadly, where does the macroeconomic environment, and gang, by the way, what does macroeconomic environment mean? There are 4 pillars to macroeconomics: growth, inflation, money supply, monetary policy. Anything else, and a lot of times what happens is people start to infuse a conversation about news into a macroeconomic environment conversation. If the news affects one of those 4 pillars, again, growth, inflation, monetary policy, money supply, if growth is affected by some bit of news, or if inflation is affected by some bit of news, well, then yes, that has the ability to start to edge into a macroeconomic influence. But the degree of confusion and the degree of absolutely considering everything not on the charts macro is very dangerous. Remember that news is not macro. And in this particular macroeconomic environment, we're seeing inflation on the rise, we're seeing growth on the rise. Utilities and staples typically do not do well. There are, by the way, 4 different combinations of the whole money supply, monetary policy, growth, and inflation. So we have 4 different macro stages. And this is something that global investment desks back in the early 90s sort of embraced as the way in which to categorize the behavior of an economy by measuring those particular pieces. By the way, the most important piece, we talked about this here in Charts and Coffee before. This is the balance sheet. This is the assets, the balance sheet. Take a look at the way in which the balance sheet basically headed straight up in 2020. Boom, right? Think about what the markets did after March to April. Take a look at the balance sheet went higher, and think about what the equity markets did after that. What's the precursor to that? Well, money printing. You can't increase the balance sheet unless you got the money to increase it. You need money to spend. And so you'll see that the M2 money supply started moving higher right around the same time. Shocking, I say. So this is how you understand how macro influences will then help markets like this move higher. And I would be very careful around staples and utilities. So thank you for the question, Eric. All right, good stuff. All right, next up is, all right, kind of a personal question here. Kind of a personal question, but I'm happy to answer it. Where did it go? All right, here we go. Kind of personal. All right. What do we use to make coffee? Yeah, I'm partial to a French press. I'm partial to a French press. All right, Stitch Fix. Thanks for the question. Pulling back. Now, look, this was a market that had gone parabolic. What does that mean? It accelerated enough to the point where this was not sort of a vanilla trend. What is a vanilla trend? It's staying within the typical historical daily price movement ranges. And gang, if there's anything that's going to allow you to have a better understanding of what's happening within the context of a trend, it is a measurement of volatility. It is putting the measuring stick of historical volatility with a multi-month, I like a 6-month look back. Well, if that's the case, when a market does go parabolic, the behavior, even though it's trending, is very different. And when it does finally start to move lower, you'll see that it oftentimes is going to do so in that same exaggerated way. I don't necessarily want to engage Stitch Fix yet. I'd like to see an inside day or a minor low. I'd like to see maybe us match up to a swing low, maybe even head down to 80 before I do anything with Stitch Fix. But all that being said, I am bullish. Definitely, I am bullish. All right, Draftking. Jump into that. All right. So generally speaking, again, path of least resistance is up, but it is a lumpy, bumpy ride. Again, get the direction right. And if you're not confident about the direction, don't trade the name. We've got plenty of others to look at. This one's gone parabolic. I'm not going to buy at higher highs. Not that there's anything wrong with it, but unless I have a volume confirmed breakout through a significant level that I feel is almost like a tripwire for higher highs, attracting more buyers. Because look, there are a couple things to think about when you're looking at a parabolic market. One is, quite frankly, greater fool theory. Greater fool theory rules a parabolic market because what it really demands is that we have someone willing to pay more than we did to keep the party going. All right. So greater fool theory would be an issue. Another issue, if you want to think about some tendencies, is sort of the hot hand fallacy. Not that the hot hand fallacy here is, it's not the same application, say greater fool, but you know, the idea is if it's going to go, if it's heading higher, it's just going to keep heading higher. Just like if a basketball player is just sinking, you know, three-pointer to three-pointer, the next time they do it, we expect there to be another three-pointer. Not necessarily. So think about some of these assumptions we make about whether a market will continue to go higher. And then more important still, measure the risk that you have by engaging the market near the top of the range, okay? There can be great breakout trades, but I think the best bit of advice I can give about those scenarios is to engage that breakout sooner within that transition from a bullish market or even a vanilla type trend to it going straight up parabolic. You've really got to get in that move early, right? I think that's really important. Space, same story. UUP is an interesting one. UUP is a really interesting one. So remember, when you're playing UUP, you're playing the US dollar basket, and we're ending up with a little bit of a short squeeze here. And that's fine. That's fine. Remember that when you play currencies, you are always playing one currency against the other, or in the case of the UUP, in the case of the dollar basket, you are playing a basket of currencies. There's no such thing as simply buying a currency. You're always doing it against something else. If you're buying the euro, you're doing it against the dollar. If you're buying the pound, typically you're doing it against the dollar in futures and in currency ETFs. Of course, in Forex, you can do a whole lot of other things in terms of, you could buy the dollar against the euro, but you could also buy the euro against, say, the yen, right? There's different combinations. Anyways, without going into an in-depth discussion of Forex, remember that the dollar index is a measurement of the US dollar against 6 other currencies: euro, franc, yen, Canadian dollar, British pound, and krona, Swedish krona, because gosh, we all need to trap that Swedish krona. So anyway, we're getting a bit of a short squeeze. Now, if you can choose, right? Choose your player like a game of Mortal Kombat. Choose your player wisely, because it is very much like Mortal Kombat. British pound is faring far better against the dollar than the euro. Australian dollar is doing a little bit better against the dollar than the euro. Right now, I like the pound a lot because whatever strength the dollar's got, the pound's got even more. Hence, the uptrend is intact. Okay, when you look at that British pound, which you can also trade via the FXB ETF. All right. So with that being said, gang, that 20 minutes does fly by. I don't know how you guys feel about this new layout in terms of the software that I'm using. I think it is working better. So thank you for punting with me. I do like my ability to put myself in the corner, but you guys don't need to see my face and my waving hands while we're doing these sessions. So as always, thank you for joining me for Charts and Coffee. If you're a member of one of our simpler rooms, well, head on over to your options room, your mastery, the futures room, and I'll see you guys for the open in the futures room and for the close in the options rooms. You guys can join me now in the futures room, and at 3 p.m. in the options room. And in the meanwhile, if you're not a member, feel free to check out one of our services. We have trials for many of them. As always, I appreciate your time, and I'll see you guys tomorrow at 9 a.m. And if you haven't yet, check out the Countdown Trader. It's my free newsletter, a great way to sort of fill the time in between with articles and tips and things like that I'm looking at. That's at countdowntrader.com. All right, gang, time to go trade the open. I'll see you tomorrow. Be good to each other.